So basically, don't swear because we can't edit. Fair enough. Does Katie see this? Okay. It's Katie. She will. What else does she have to do? Nice headset, by the way. That was the one that was sitting at this desk, huh?
Good afternoon, everybody. I'm Dan Hussey with Zaner Ag Hedge, bringing you our strategy of the day update for May 21st, 2020. In a moment, I'll bring in Ted Seifried, the director and captain of the ship, the chief market strategist over here at Zaner Ag Hedge. But before then, remember, trading futures involves risk and is not suitable for all investors. Everything we talk about here today isn't a direct trade recommendation and just our own opinions. But if it is something you want to turn into a trade, get in touch with Ted or I, and we'd be happy to have that discussion with you. With some other people into this, and I'm happy that we can finally kind of do so. So what have you been up to?
Yeah.
What's new in the world of ag hedging? And I'm surprised we don't have a corn hat. I even went and drug up one of our Zaner Ag hats just in case you had the corn hat today. But yeah,
Nice.
Thanks for being here.
Yeah, no. So the corn hat is at home in the home office. It actually is sitting on top of my Peloton. But I'm in the office today, as you guys can see. So no corn hat today. I need to get a second one so that I can have it wherever I'm at, right? So that's something it sounds like a post-lockdown something to do. I mean, just for the most part, I'm in the office Tuesdays and Thursdays, and otherwise staying at home, trying to stay safe, trying to keep everybody else safe is really the main thing. And at this point, I'm building my own gym in my house because I don't feel like the gyms here in Illinois are opening anytime soon. So I picked up some 65-pound dumbbells. I'm going to pick up a bench on my way home today. I've got some 95-pound dumbbells coming in the mail. I got some 30-pounders that I got a couple weeks ago, and just trying to adapt, man. As far as agricultural markets, same thing, same idea, just trying to adapt. It's been a very difficult year, 2020. I mean, look, we've all had doubts on the phase one China trade deal, and for the most part, that really has been a lame duck. And in the meantime, we've had to deal with coronavirus and lockdown and, not driving anymore, ethanol really falling to pieces and ethanol plants shutting down, and concern about demand and feeding animals, and really just everything. And, at this point, I would like to say, I would like to think that the worst is behind us. We're trying to get back on our feet and out and moving again. Some states faster than others, but yeah, I'm optimistic, and I feel like the market is getting more optimistic. And if you look at the numbers, we are driving around again. Traffic's up 60% from where it was, 2.5 weeks ago. So there's some positives out there. It's a long ways to go yet. But again, maybe the worst is behind us. And now we're sitting in a time frame where, yes, we've gotten off to a fast start in planting, but we still have to grow these crops. And we usually put in some sort of risk premium at this time of year. We tend to bottom out and see a little bit of strength as we get into the spring, because we don't know. We don't know what the summer's going to look, or we don't know what the weather's going to look like this summer.
Yeah, we've been taking a look at some of those seasonals, how this time of year there's a strong seasonal for corn to bottom out into July for multiple reasons. But generally, you see that pickup in the export market. And over the last several months, we've seen a strong export market in corn. Now we're starting to see that export market maybe start to pick up some pace for the soybeans. But haven't we seen the worst and the most pessimism out there for corn? Didn't we just come out of a period with crude oil going negative, bringing into question, ethanol's, feasibility and economic stability? Haven't we seen the worst for corn already? And then, of course, the icing on the cake of 97 million acres from the USDA. Is this the worst for corn? What else bad news could we see?
So yeah, don't tempt the market. I mean, we talk about black swans.
We'll find
Man,
corn growing in every backyard in America somehow, right?
Yeah, or coronavirus mutates into something that is a lot more deadly. Look, there's Northern America, for example, but we've had black swans. We've had a whole flock of black swans to this point. Can it get worse? The answer to that is always yes. But will it? Yeah, I don't know. I think for the time being, maybe the worst is behind us. And what I mean, simply because I don't think 180.5 acres of row crops, combined acres of row crops, is going to happen. You look at the Dakotas, doesn't seem likely. You look at the prices, this doesn't seem like a climate where we'd want to plant a record number of row crops. Mm-hmm. So I don't think we quite get to that number. But I think we're going to get a lot closer to that number than what we were thinking 3 or 4 weeks ago. So if everything looks good for this corn crop, and we haven't gotten a significant amount of demand back above and beyond where we were before we started the whole coronavirus thing, it's going to be difficult to get very excited about corn going into harvest. However, we still have to grow this crop. We got to finish planting this crop. As you're talking about, seasonality is positive. I think the worst of us from a virus standpoint and a lockdown standpoint and a trade standpoint is probably behind us for now. So I do see upside potential for corn for the time being. But if we get to late June, early July, and this crop looks great, wow, I'm worried there could be quite a bit of downside potential. So we really need to be on our toes right now, looking for opportunities to get some hedges off, to do marketing. I mean, we can't just stick our heads in the sand and hope for better times. We got to look for opportunities, and I think we'll get them, but we have to be vigilant and we have to take advantage of that.
Absolutely. Absolutely. And, today breaking trend line support that we've seen, hold, we're still very much in a range, for the month of May in the June or July contract between 325 and, 312 in corn. But yeah, I, can't disagree with you there, right? We start heading lower here on the chart, and, a test of $3 could very well be in the nature for this market. And it's only, at this point, 18 cents away. I think that, it's been good to see a rebound in the energy market, seeing crude oil get back above $30 a barrel. Are there any levels in crude that we need to reobtain to feel like the pressure is off ethanol in the near term? Or, how are you viewing the rebound in energy products right now?
Yeah, I think we got to maybe talk about what's happened in the energies markets over the last couple of months and then talk about where we are now. When we had crude oil go negative, that was a big news thing. We have to understand that was a futures contract in a delivery month in the second to last day with 108,000 contracts open interest. Look, that was more of that was a special thing for guys like you and I. It really didn't mean a whole lot for the crude oil industry as a whole. What did is
because you couldn't go and actually find a barrel of crude for, below what the spot and physical price for crude was, but the delivery of it, you're right, it changed the dynamic, and it was about the futures delivery there.
Yeah, so the bigger deal is what happened to the June con. You shut in a lot of production. We're probably going to shut in close to 60% of our crude oil production when all is said and done. So in order to get that back, I think crude is going to have to trade over $60 a barrel for some time. If that happens, you'll start to bring crude production back online. But in the meantime, you could have a bit of an energy crunch, meaning we could really have a need for ethanol, more so than what we would normally with the blend, not only for domestic usage, but also for export. Also, really cheap crude prices, of gas. I don't have this gloom and doom idea on ethanol for the next 2 years on what happens to ethanol going forward, simply because I think we've shut in a lot of crude oil production, and it's going to take a lot to get that back.
So all we're going to be doing is eating away at the stockpile of crude we have, which means, hey, at some point, ethanol, if not immediately, is already viable because it is already more ethanol at that point than to restart an oil rig.
Right, exactly right. So I'm optimistic on that. I'm really optimistic on corn demand as a whole. We got very pessimistic when things fell apart, as we should have. But now that things are getting better, we're adding slaughter capacity every day because record profit margins do exactly that. Mm-hmm. we're going to continue to feed animals. So from a feed perspective, I'm optimistic for corn. From an ethanol perspective, I'm optimistic for corn. From an export perspective, Brazil struggling with their second season corn crop.
Yes.
Our dollar, I think, will come under a fair amount of pressure because of the trillions and trillions and trillions of dollars we're throwing at this economy. So that inflationary draft should make us more globally competitive on the corn market. And I think other countries are going to be looking to buy corn at cheap prices. So across the board on demand, I'm a lot more optimistic than what some people are. But again, if we have a 97 million acre crop or even a 95.5 million acre crop, and we get to the 178.5 or better at national average yield, we're overproducing corn. The overproduction narrative that we've been talking about for the last couple of years was a much bigger problem for soybeans than it was for corn. In the last 2 years, we've really flipped that. Now we're really, really overproducing corn, and I'm going to argue maybe underproducing soybeans.
Yes, and soybeans, the underproduction of which, a little bit of a surprise there with the USDA coming in at 400 million, 400 million metric tons carry out. Below our expectations, below most analysts' expectations. Today we see a good export number, one of the best we've seen in weeks, and yet we're down 11 cents here today in the July soybeans. I know we're still got range bound markets. It's been between 850, 860 to the top side, 830, arguably the one dive down to 820 there earlier in late April, but what gives? You're getting some good optimistic headlines, good optimistic news. Everything seems fundamentally bullish. Have we just not brought in big enough of a short to have to get a short squeeze? What's your take?
And it was 80% better than the 4-week average. So it was a good number. Now, we knew a lot of that was, again, headline following. There is a lot of negative rhetoric happening between U.S. and China talks right now. A lot of fingers being pointed at as far as who started the virus and so on and so, who's responsible for it, financially responsible for it. Should there be them, and how China would be very unhappy about us changing the way we approach Hong Kong. There's a lot of hot button topics based around the U.S. and China and the very fragile trade deal that we have, and whether that's going to be fulfilled or not. And that was the bigger thing there. It has been sort of thin, sort of choppy trade here this week. It almost feels like a holiday week, and it will feel more like that, I would think, tomorrow in front of the Memorial Day holiday. So we'll see. The crush number has room to go higher. I feel like to give us a scare, to make us feel like we're going to run out of soybeans. So, this growing season, while corn might not be super weather sensitive, the soybeans really should be.
Yeah, and the stock to usage ratio for those following at home at 405 million bushels, that drops as action. We've been caught in a range, but at the end of the day, get to commit, to 20% flip to soybeans. Do we run a risk? I mean, certainly we're not buying the acres with price right now, but is there a risk in the Dakotas, up north of shifting, or will people simply take those acres or try to take acres out of production?
Yeah, so prevent plant is a very viable option for those of us that have things, have inputs down for corn. We're probably not going to put soybeans on that. I don't think you see 20%. No, we're not going to shift the rest of what we have to plant to corn. It's early. We'll get a lot of that corn planted. I don't think we're picking up a tremendous amount of soybean acres. But as I was saying earlier, 180.5 million acres of row crops combined between corn and soybeans, I don't see that. I see something more along the lines of about 178. So you're going to get some prevent plant acres up. They've gotten rain recently that, if they don't dry out to the point where they can get into plant by Saturday and then the bean acres will be the question. 95.5 million acres in corn, the 8.5 for row crop acres. So that's where I think we'll end up. You might have some replant necessary for soybeans. We'll decide later if we need to do it or not, but it's really very early. I don't think there's any reason to get excited about planting concerns right now. Sure. I think ultimately the concern should be what happens during the growing season, what happens during summer. Can we hit trend line yields? Are guys planting just the plant, So yeah, I mean, just typical spring, summer weather market should really be the dominant force here as we shift more to a positive attitude as we come out of Corona or start moving into a more open economy. And again, the trade thing with China is going to continue to go on until we actually start seeing the purchases. But I'm optimistic that we will. I think China really has motivation to try to look good for the rest of the world, at least keep some of their promises, because they've really gotten a bit of a black eye with the coronavirus situation.
Yeah, and a lot of good optimistic talk, a lot of good headlines about China wanting to make good or will make good on those phase one agreements. And at this point, there's a lot of catching up to do, and like we've had discussions in the past, and you brought up brought up the point today. If they do and they start chewing away at our pile, there's not much of a pile for them to take. So it can get price rationing and elasticity of demand here could take price higher very quickly. We get out of here. Any comments on what is driving, couple days? Is that the biggest proponent here, or what's causing wheat to be up 20 cents with corn and beans
I mean,
unable to move?
You hit most of the main ones.
Okay.
Russia lowering their crop estimate. Look, we've all been lowering them, so for them to finally come around and for us to see that was good. Mostly, I think it's the crop tour, the sort of modified virtual crop tour. It really confirming that maybe we had a little bit more damage than what the market was willing to admit from the freezes and the frosts that we had, the weather that we had a couple of weeks ago. That is, keep in mind, Chicago and Kansas City wheat had been in a kind of a free fall leading up to the last couple of days. So we took some of that back. What's kind of been interesting is that spring wheat, while it hasn't really gone down much, it's just been sitting at lower levels, very similar to what the Chicago levels, price levels are, within a couple cents, really hasn't reacted to the slower planting the spring wheat crop yet. So that's something to watch. You might end up seeing Minneapolis wheat lead the way higher here at some point. But I'm fairly optimistic on wheat. I think the wheat demand really got a bit of a boost from the coronavirus issue because we all went out and bought pasta, bread, things like that, stocked up our pantries. Wheat almost was one of the coronavirus positive trades. We have this sort of newfound want to have stocked pantries and be prepared for something like this if it were to happen again. So I might be better than what we were originally thinking.
Yeah, and we are also coming off of a couple years of a lack of production from places like Australia and India flipping to be a net importer. And, at the end of the day, you just have a really big technical range in a market that we're starting to come off of the lows of and maybe, get some short covering. So, the dollar, like you said earlier, expecting more inflationary improvement there and some weakening of the currency could only uptick our export markets and ultimately help wheat. Well, with all that being said, Ted, is there anything else you want to let our viewers on Facebook know? Or, how about how to get in touch with this fine guy like yourself?
Sure. You can reach me directly at 312-277-0113, or you can find both of us collectively on the web at www.zaner, that's Z-A-N-E. I don't know if we'll have the animals out there because, we have had to call part of that because we have part of our herd because we haven't had the processing capabilities. That is
now we've obviously seen cash markets hold on pretty well here, and futures arguably get over.
Good climate for people that have done risk management.
Absolutely. It now, rather than just August here, is it just because of the bat? Maybe the bat. Is there a reason we'll need that much time?
Okay. Why I'm focusing on December. I'm also liking it because I don't think there's a whole lot of downside risk when we're trading 52 December hogs. Maybe we go to 48, but I don't see us going to 42. It's possible. Hey, anything's possible. I just don't see a whole lot of downside potential in the December hogs compared to the front months, June, which was really strong today based on stats right there.
Yep. It's
no Dan.
been vacant for some time. As I got some good sun and some color in Florida, we had to do what we had to do. It was quarantine, what can we do?
Yeah. Hey, right on.
Well, thanks so much for joining us, Ted, and pleasure. We'll have you back again soon.
All right, Dan, you take care. Talk to you later, all right?
Bye. Well, everyone, thanks for joining us here today. It's been a great presentation there Ted Seifried from Zaner Ag Hedge joining us. Happy to have him as part of the crew to maybe start giving us a little bit more content here in the group. 110. Get me on Twitter at Daniel Hussey Jr., right here on Facebook at Dan SOTD, or shoot us an email at dhussey@zaner.com. Check out below for Ted's information. Get in contact with him if you got